This is a lecture from Open Tuition. To benefit from the lecture, you should download the free lecture notes from opentuition.com.
Okay, now in the last chapter, we talked about the need to keep measuring the performance of the company. That although our job ultimately is to be more successful, we need to keep checking how well we're doing. And in the last chapter, we looked at financial performance measurement, where I think clearly any company we need to check is profitability increasing. If profitability is suffering, then we need to know what's gone wrong. However, there is a danger in looking simply at financial performance. And the danger is this, that it's very easy in the short term to increase profitability in all sorts of ways, and obvious ways by cutting costs. But the danger is that if we're not careful, we can cut costs and perhaps quality might suffer. For instance, if you're a service industry, if you're a hotel, we could sack lots of staff, cut the costs, make higher profits this year, but if we sack half the staff, then the danger is the quality suffers. And although we may not lose much business this year, customers are already booked in, if they find the quality's bad, the risk is we'll lose business next year and that profit will suffer in the future. And so, if we want to make sure that we keep on increasing the profit, we need to check not just each year what is the profit, but we need to check on things like quality. Has quality improved or is quality suffering? Because again, if quality is suffering, profits in the future are going to suffer as well. And so that's what we're talking about here. We need to look at a range of measures. We need to look at financial measures, but in addition, we need to look at things like quality and find some sort of way of measuring it. Now, there's no numbers in this chapter. It's more what you might call written. In the multiple choice, a choice of sentences. But what you've got to be aware of is two papers that have been written on this. Lots of people have written things about different measures we should look at, but two in particular. The first one, Fitzgerald and Moon. They were two people who wrote a paper, Mr. Fitzgerald, Mr. Moon. They wrote a paper on different performance measures, specifically for service businesses like hotels. The other one I'll write down later when we come to it, but the other one is what's called Kaplan and Norton's Balanced Scorecard, where they wrote very, very similar things, but they were looking more at non-service businesses. However, let's look at Fitzgerald and Moon first of all. They said, I say it's service businesses we're looking at. Let's think about a hotel. But they said we should look at a range of measures, and they grouped them under 6 different headings, and the headings are listed on the first page of the chapter. They said certainly we need to look at financial performance. Now, I'm not going to say any more about that. Look back at the previous chapter, but to look at things like profitability and so on. And they also said, though, if we want to make sure we are successful in the future, we need to look at competitive performance. We need to check how well we're doing against our competitors. For instance, a hotel. We may have far more customers this year, great. But if our customers have gone up 10% and all our competitors have had 20% more business, then perhaps things don't look so good. Equally, it may be a bad year and the number of customers we've got has fallen. But if our competitors have fallen a lot more, then maybe we're actually doing a good job. So, we need to look at competitive performance, and one thing quite important about Fitzgerald and Moon, we need to think of a way of how we could actually measure it. It's no good saying at the end of the year, are we better, are we worse, and having a debate. We need to decide on how we could measure, how we could put a number to it, and then we can say, This year we're better, or this year we're worse. Now in this exam you won't be expected to do an awful lot. It's something that's examined again in paper F5. And so I'm not going to go on and on about these, but one way, for instance, that you could measure competitive performance is by measuring our market share. Now even that could be defined in various ways, but one way is perhaps a percent of total customers in the industry. I say it's only one way. Do it on revenue, do it on all sorts of things. But if we could find out in our town what the total number of customers was, how many came to our hotel, expressed as a percentage, then that would be a measure of how well we were doing competitively. If the percentage goes up, good. If it goes down, something's going wrong. The next heading, quality. I think I've already said enough in that our hotel, if we're delivering bad quality to the customers, will lose business in the future. But how can we measure it? How can we actually put a number to it, and say the quality is 10% last year and 12% this year, something like that? Well, just let me give you two suggestions, but it's not a question of learning them. The important thing for the exam is being clear what we mean by quality. Well, I'll give you two suggestions. One way we might measure it for a hotel is we might measure the percent of customers returning. That's an indication of quality. The more customers come back a second time, it would suggest that they're happy with the service. The fewer, the worse. So there's no right way, there's no best way, but that is certainly one way we might consider. Another one is perhaps just simply number of complaints. Again, it's an indication of quality. If we measured the number of complaints each year, the lower the better. If it goes up, again, it's a problem we need to address. Next one, a little bit less obvious, but flexibility. Let me give you an example to try and explain what it is. Most hotels have a restaurant. And there are times, obviously, when the restaurant is perhaps very busy. There are other times when the restaurant is very quiet. Well, what we mean by flexibility is that we are able to deal with varying levels of demand. It's no good just having two waiters in the restaurant, and in quiet periods, no problem, but in busy periods, people are having to wait for 2 hours to be served. Ideally, surely, in busy periods, we'd have more staff. In quieter periods, we'd have fewer staff. So that's what we mean. Flexibility, it's the ability to deal with changes in the level of demand. And again, I'll give you two examples. One example relating to what I just said about the restaurant, that in busy periods, if you're flexible, you need more staff. In quiet periods, less staff. One way of measuring it would be this. The number of staff with more than one skill. Now, what I'm getting at there, suppose we have a hotel that's got a restaurant and a bar. And of course, sometimes the bar's busy, sometimes it's quiet, sometimes the restaurant's busy, sometimes quiet. But if we've got staff who are trained to work in the bar and work in the restaurant, then we can move them between the two, depending on which one's more busy. So instead of just having bar people and just having restaurant people, again, people who can do both jobs. Oh, just one more, another example. The number of staff on short-term contracts. In fact, it's quite common in many countries for hotels to employ a lot of people by the day. You know, you have some people who are paid, employed by the year sort of thing, but other people are just employed on a daily basis. So if it's a busy day, if there's a big wedding or something, you get more people in. A quiet day, you don't. So the more people you're employing by the day, the more you can be flexible with the number of staff. The next one, I'll keep to the order here, resource utilization. We want to use our resources efficiently. Now, a hotel and most service industries, the main resources, the main costs relate to the building and relate to the staff. That's where the main costs are, I'd have thought, as I say, for any service industry. Well, you want to make sure it's used efficiently. So the building, with all its expenses, surely the busier the building is kept, the better. And the standard way of measuring it would be the occupancy rate. I think all major as a percent. What percent of rooms on average are occupied? And I think all major hotels measure that regularly, because the higher this percentage, again, the percent of rooms occupied, the higher the percentage, the better. You're using the resources efficiently. The other big one is staff, and of course there's all sorts of staff, but just one example, the cleaning staff. Again, if you're going to use your staff efficiently, we can't afford one cleaner for every room. That would be ridiculous. And so, an example would be something like the number of rooms per cleaner. Now, just one thing. Remember, I did say at the beginning, Fitzgerald and Moon say we need a range of measures. Now, on the one hand, we want better quality. And if we want good quality, we want the rooms clean. Perhaps the ideal would be one cleaner for every room. But on the other hand, we do need to be efficient. We need to use resources efficiently. We can't afford a cleaner per room. The fewer staff, the more rooms per cleaner, the better. So it's actually getting a balance. We're not going to achieve perfect quality, but it's getting a balance. Again, we need to look at a range of measures. How well are we using our resources? How good is the quality? Finally, for Fitzgerald and Moon, the sixth heading they said we needed to look at was innovation. That, of course, however well we're doing at the moment, if we want to grow in the future, we need to have new ideas. We need to think of new things to offer in the business. And so, very standardly here, the sort of thing you'd look at is the number of new ideas, of new services offered. A hotel. Maybe, at the moment, they don't have minibars in the restaurant. I beg your pardon, in the bedrooms. Perhaps if we did put minibars in the bedrooms, not only does it improve perhaps the quality, the customers are happy, but also, assuming we're charging, there's another source of revenue. That's the sort of thing we mean. When I say number of new services offered, it doesn't mean they're all going to be successful. You might try 10 new ideas this year and only 2 actually work. Obviously, you can't expect everyone to be successful, but the more new ideas you try, the more chance there is of finding ones that work. And we need new ideas to grow the business. So, probably in more detail than you're going to need, to be honest, but there's what Fitzgerald and Moon are saying. The other one to be aware of, though, the other paper that was written, I mentioned earlier, Kaplan and Norton. They came up with very, very much the same sort of idea. They phrased it differently, and they were looking more at manufacturing companies. But they grouped them under different headings. The headings are on the second page of the notes. And I'll run down them. But just one thing, they refer to it as the balanced scorecard. And I've just noticed the notes, I'm afraid, says balanced scorecard. It's balanced. That suggests numbers. Again, it isn't numbers. They're just saying we need to look, a bit like Fitzgerald and Moon, we need to look under several headings. And it's forming an overall judgment, an overall balance. I said earlier, you can't have perfect quality. You need to be efficient at the same time. Anyway, their headings, they're listed on that page. Customer satisfaction. If we want to do well in the future, we need to keep the customers happy. And so just one example of something you might measure, but there's lots of things you might measure. It depends on the business. But one example, perhaps the percentage of items returned as faulty. Which is very much a quality measure. But the more they return, the less they're satisfied. I said just one example. I'll give you a second one. It depends on the business, obviously, but the number of the percent of on-time deliveries. If we're delivering to customers and we've promised a delivery date, what percentage of the time do we deliver on that date? The more late we are, the less the customer satisfaction. The second heading, the second thing we need to look at, process efficiency. And whereas customer satisfaction is obviously looking at the outside, the customers, process efficiency is looking internally. How efficient are we? And there you're looking at things like resource utilization. Resource is likely to be your labour, so you could look at various labour ratios. I won't talk through them, but look back at the earlier chapter in the notes where there are several mentioned. But how efficiently are we using our labour? How fast are they working? What percentage of material wasted? If we're wasting material, clearly we're losing money. It's not efficient. Whoops. The next one, growth. Or, as I've written there, innovation and learning, which gives the hint as to what we're after. Again, a bit like before, but it's the number of new ideas. Another example of that, though, which is quite important, is the number of new ways of doing things. What I'm getting at there, a very, very basic example, but to try and get the point across. Maybe we make desks and we've always made them by hand. Well, we should always be looking to see, can we make them in other ways? Can we change the way we do it? Could we perhaps make them on machines? Maybe it's better, maybe it's worse. We need to check. But we should always be looking not just for new products, but for different ways, better ways of doing what we already do. Finally, of course, although we do need non-financial measures, they also mention financial perspective. You will want to look at, ultimately we do want more profit, you will want to look at financial measures. But it's a range of things. They suggest that under each of those headings we look to what are the most important things to measure. Customer satisfaction. Is it percentage of faulty items and so on? But to come up with several measures under each of those headings and then form an overall judgment. All right, well, that's Fitzgerald and Moon and Kaplan and Norton. One other general thing that affects businesses is something we call value for money. And although what I'm about to say can be applied in a sense to any business, this is really of much more concern to state organisations, things like the State Health Service or the State Police Force. Where the state's putting money in, obviously, to finance the police, but the state wants to try and make sure they're getting good value for the money they're putting in. And standardly, to measure whether we're getting good value, they need to look at three things, and it's the three E's: economy, efficiency, I'll do them in the other order, effectiveness, and efficiency. Now, I've written in the notes what they mean, but let me make sure you're clear and give you examples. Economy, I've written down so I won't write on the screen. They want to check they're paying a fair, reasonable price for resources. For instance, if the state's decided we need 500 new police cars, they clearly want to make sure that they're not being overcharged, that they are paying a fair price. So, for example, buy 500 new police cars. How might we make sure we're paying a fair price? Well, I think the only thing you can really suggest, which is what most countries I think do, is put out to tender And what I mean, if you're not clear of the words, is what most countries tend to do if there's a big purchase like that, is to advertise in the paper that they need 500 police cars, and give a specification, but then ask for quotes. So don't just go straight to the supplier, get quotes, and then choose what seems to be the most economical. The next one, remember here in my example, I'm talking about funding the police force. In terms of value for money, the next thing is what we call effectiveness. That, of course, they want to make sure the police do a good job, that they are successful at what they're trying to achieve. So how might we measure how successful the police are, how good a job they're doing? Or what are the police there for? They're there to solve crimes, so one thing you might look at is the percent of crimes solved. But as when I went through the earlier ones, there's no best or one measure. You'd look at a range of things. Another thing you might consider is the police are clearly usually called out as a result of an emergency call, an emergency phone call. So you could look at measures like percent of emergency calls answered within 30 seconds. And sorry, I don't mean they arrive on the scene in 30 seconds. I mean they answer the phone. But sure, the longer they take to answer the phone, the less good a service they're actually doing. Finally, though, although clearly we want them to solve crimes, etc., there's a limit to how many police the state can actually afford. We can't afford one policeman for every member of the population. We want to use resources efficiently. And so that's the last one, efficiency. It's using our resources well. And so if we're talking about police, I just effectively gave you an example. You might look at the number of policemen. Number of police per 1,000 of the population. Obviously, different towns, different cities, bigger, smaller, they need more or less police. So perhaps in each town, let's measure how many police per 1,000 population, and we can compare. And in terms of pure efficiency, the smaller the number, the better. That's something I've kept saying, but yet again, it's a question of balance. The state has limited funds. They want to make sure they're using the funds efficiently, that we don't have policemen sitting around playing games. It would suggest we're too many. At the same time, we want them to be as effective as possible. They're never going to be perfect, but they are solving a reasonable number of crimes and so on. Can I mention one last thing? In many languages, effectiveness and efficiency tend to mean the same thing. In English, they are different, and I hope I've made it clear. Effectiveness, are they doing what we expect them to do? Are they solving crimes? Efficiency, are we using the resource well? That again, we've not got policemen sat around. You see, you can have the situation where they're solving crimes wonderfully, but we've got so many police that half of them are doing nothing all day. That's not efficient.